One, during the 5 days from Thanksgiving through Cyber Monday, Bed Bath used a new strategy, mass promotions, not just this endless couponing. They used mass promotions. And that strategy worked ridiculously well. Compared to the same 5 days in 2018, same-store sales were actually up 7.1%. That's gigantic, with strength in both physical and online business. That is huge. These are the most important holiday days of the year for selling. It is unbelievable to me that so many people are overlooking that spectacular number. They're not doing their homework. Two, Tritton's bringing the company out of the dark ages with plans to massively improve their digital presence, which is what he did as chief marketing officer at Target. I mean, the merchandise is great there. He had a lot to do with it. Three, Bed Bath's closing bad stores, but they're doing so in a disciplined way, while ensuring that they help clear out excess inventory. Let me give you an example. The company's delaying 20 closures in 2020 so that they can use those stores for clearance sales in the first half of the fiscal year. Makes sense. Four, believe it or not, customers still like and trust the Bed Bath & Beyond brand. The problems here had to do with terrible execution, not irrelevance. Also, the stores they don't look so hot. According to an NPD consumer tracking studio, Bed Bath's #1 in brand awareness for housewares and home goods. #1. Do you know that 79% of their customers have a favorable impression? That kind of shocked me. So maybe Tritton's got more to work with than you think, particularly you sellers. 5, after all the high-level resignations last month, Tritton's now bringing in his own team with, quote, the right talent and expertise to execute our new vision and inject new ideas, but also the right organizational structure to facilitate a more streamlined decision-making, end quote. Further, he added, quote, the volume of inbound interest has been extremely high, and I'm confident we will recruit top talent for these positions, end quote. Hey, that makes sense given his long and successful career in retail, although a lot of people think he can't attract good talent. I'm telling you he can. 6, the CFO laid out a plan to get rid of $1 billion in bad inventory over the next 18 months. Basically, they're clearing the decks of stuff that isn't selling, and that's exactly what the textbook says you should do to have a turnaround. 7, Tritton finally curtailed the company's foolish, ridiculous, moronic, I'm Jimmy Chill, I'm sorry, ill-advised buyback. For years, Bed Bath burned billions of dollars repurchasing its own stock. They should have just put it in a chimney at much higher prices. It was the worst possible thing they could have done. Maybe the most stupid buyback in history. This quarter, Tritton only spent $1.2 million on buybacks, and he's backing away from it. That's perfect. 8, you know what sets Bed Bath apart from so many failed retail turnaround stories? It has a great balance sheet, which allows the company to approach things like asset sales from a position of strength rather than weakness, so get good prices. 9, they're already seeing improvement in their cost of goods sold. That's pretty amazing in 60 days. Tritton expects that to get even better as they build out their own private label brands. And then 10, this spring, Bed Bath's holding an investor event. Now, you need to be in this stock before that because the company is so poorly run that just some basic blocking and tackling from a seasoned pro like Mark can potentially work wonders. That event could be the catalyst for much higher prices. The bottom line, yes, I agree. Guilty. Bed Bath & Beyond had a terrible quarter. But it's a new CEO, and he's already made some bold moves to turn things around. And many of those initiatives are already working despite the stock price decline. This quarter was the last gasp of the old, incompetent management team. Do not let it scare you away from what I think could be a fabulous comeback story.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.